Welcome. My name is Jason Balin from Hard Money Bankers, as well as REI 360, and today I wanted to go over a financing comparison related to different types of funding for all your real estate transactions. So I broke this down with some assumptions, but this is related to getting bank financing, using your own cash, having a 50-50 split joint venture with a partner, as well as using hard money bankers or any other hard money lender. Obviously the financing can work with any hard money lender out there, but for the purpose of this video, I'm one of the principals of Hard Money Bankers, we're going to talk about us. So here are a few assumptions. We're assuming the property resale value is $200,000. You're holding it for 6 months, and there's a $30,000 construction reserve held by the lender or the bank or the hard money lender. And we're also assuming there's a 6.5% resale cost, so 4% realtor fee and 0.5 trans-rec title, stuff like that. So in your market, if it's a little bit different, just look at that. So as you can see, the first few lines are the transaction, the purchase price, and the construction costs. I'm making the assumption that a typical institution is at about 6% and a point, and the difference is they're basing a lot of their stuff off loan to cost, not necessarily the ARV like a hard money lender does. I'm just using industry averages of 14% and 4 points for hard money bankers or for any hard money lender. For those of you who know hard money bankers, you know that our borrowers that we do a lot of work with are getting cheaper terms than that. But let's just use that because that's kind of the industry average for a hard money loan term. So obviously there's pros and cons, and there's no right or wrong out of all of these. In my opinion, if you have more cash than you know what to do with, then I certainly would suggest use your own cash. If you're looking to deploy cash and you're looking to put it into something and you don't have anything else and it's just sitting on the sidelines, you should use your own cash on these. As you can look all the way at the bottom here, your net profit, if you're using your own cash, is higher than anything else. Your cash on cash return is the lowest, but that being said, it's still a pretty darn good rate of return than most other investments. So if you do have a lot of cash, I would certainly do that. Use that. So pros and cons of the bank obviously are, the bank money's cheap. It's cheap. It's just hard to access it, and you're always going to need a lot of your own money even when you are doing bank. So look at this. The bank at 100 plus 30, so 100,000 purchase price, 30 construction. You're going to need a good $43,000 for the life of that loan, and that's the 25% down plus holding costs, things like that. But you're going to need $43,000, and if you look on the hard money lender's end, you need a little bit more than half of that. Doing a loan through a hard money lender. And because of that, your cash on cash return, which is one of the big things that most real estate investors really should be concerned about, is here. 145% cash on cash return in this scenario using a hard money lender. And you get 100% cash on cash return from a bank. And, like you said here, 36% if you're using your own cash. So another common way to get into deals is doing like a 50-50 joint venture. And that's actually something that Hard Money Bankers does, and I'm assuming some other hard money lenders do as well, is do a 50-50 cash partnership. You don't really need much of your own money. You can get into these deals yourself. And, it's you're still making a decent profit. Obviously, if you're doing a split with somebody, they're going to take half the profit. So if you look at this as a net profit, biggest bang for your buck, it's the lowest amount of return. But there's also something to be said about getting into a deal and using limited or none of your own funds. So it's funny because my business partner Chris and I were having a conversation recently. We do a lot of projects in the Washington D.C. and Baltimore market, but in the D.C. market, there's a lot of high price points, and there's a lot of builders out there that are tearing down old junk boxes and building these really nice 4,000, 5,000 square foot properties. Areas in Montgomery County or like Chevy Chase or Bethesda, areas like that, if you know the DC market. And, the two of us had a conversation with somebody recently, and they're like, yeah, I would never use hard money. It's way too expensive. I'm only going to use, a joint venture partner. it's the only way for me to go. I have some of my own money, but I'm not using hard money. It's way too expensive. And we're like, well, listen, I get it. You don't want to put any money into a deal, and you want to do a joint venture, and you want to give up half the profits. That's fine. But in this particular case, the guy did have money, and he kind of just was a little bit uneducated related to it. And I was like, listen, why give up half the profits, to this joint venture partner when you don't need to? Get in with a hard money lender, either hard money bankers or somebody else. As you do volume, the terms come down a little bit. This is kind of like the worst case scenario of a net profit right here. So, he's making almost $10,000 more just by kind of putting up a minimal amount of his own money into this deal. And he also was telling me he was missing out on opportunities because he was too stubborn to use a hard money lender or private lender, because he was and the reason we had this conversation with him, he was like, yeah, I only use joint venture partners, but my guys run out of cash, and then when I'm out of cash, I can't do any more projects. And to me, that's absolutely insane. It's like, how are you going to pass on a good project because your cash partner doesn't have it, and you even have some of your own money to put into these deals? So as you can see, if you did a hard money loan on this, your financing costs are $15,800, right, into this deal, and your financing costs are $15,800 with a $33,000 profit in that. It's pretty darn good, and that's at $130,000 kind of figure, purchase plus construction, with a $200,000 exit. And these numbers work in any price point. I'm just using this as easy numbers to look at. These work in a smaller price point. These work in $1 million price point. So I've always really had a strong opinion of never passing on a good deal just because you don't have the money available, because between all four of these, there is a lot of different financing options for your real estate investment deals. Obviously, it has to be a good deal. That's number one. When most people complain that they can't get money for a deal, it's because typically they don't have a good deal. That's usually what it is, because we've never passed on a bad deal. There's always an option if you have a good deal. So that's number one. And again, I'm not, recommending or not recommending one or two or three or four of these. I think these are all very viable options based on where you are in your current situation. If you're a bankable client, and that's hard to get these days, is banks to do your deals, especially at the time frame that you need these real estate investments to secure these contracts. Auction deals or distressed homeowners and things like that, they want their money quick. So it's very difficult, even at cheaper terms, to get a bank to get these things quick enough. But if you can get a 30, 45, 60-day contract time, and you can get your bank to finance it, and you're bankable, absolutely. It's a great option, and you want to put up all the money, obviously. Here, you have, like we talked about, you have almost double the amount of money into the bank deal. And a lot of folks, that we do loans for at Hard Money Bankers, they come to us and say, hey, I don't really, your terms are a lot higher than I'm used to. I'm used to using a bank. It's like, you're right, but you're also used to putting up twice as much money. And, you're missing out on opportunities because you don't have all the money to do these deals. So, now you can do twice as many deals, with half as much money. So, of course, it goes back to kind of what what works best for your solution. But I'm a huge advocate is, if you have, let's keep this really basic. If you have $100,000 in cash, what would you rather do? One deal in cash with that $100,000, or 10 deals with a hard money lender and have to put $10,000 into each one of those, right? You can get into 10 deals. Yeah, each one, the margins are slightly smaller, but collectively they're much larger. So, again, thanks for watching this video. My name is Jason Balin with Hard Money Bankers, and this is the financing comparison. And if you ever need to get in touch with us, feel free to reach out to us at hardmoneybankers.com or 800-883-8290, or you can email me directly with any questions at jason@hardmoneybankers.com. And we are also part of www.rei360.net, which is our tools, education, and community for all real estate investors to collaborate and get more deals done. Thanks again, and I hope you enjoyed this video.